Happy Friday, everybody. We are knocking on the doors of new highs, but there's a sort of tug of war between cyclicals and defensive stocks going on this week. For the moment, today, cyclicals are winning out here. So retailers up a little bit. Energy started up and now turned negative. Banks, industrials, also fractionally to the upside. You know, this has been a remarkable week. A lot of theoretically bad things have happened this week, and the market has largely shrugged them off. So I just want to remind everyone that, you know, stuff could have gone wrong very easily here. We're shrugging off the whole Iran issue, the big surge in oil that we've seen. There's that whole thing of spike in repo rates that's made a lot of people crazy about market plumbing this week. And then we just had very poor China industrial production and retail sales data. It seems like a long time ago, but that was this week. We sort of shrugged all of this off. But we are seeing, though, that old cyclical rally that happened a few weeks ago, that's kind of faded. A little better today, but if you take a look at, they call it value sometimes, but cyclical groups here in the last few days, like retail, transports, metals and mining, regional bank, these are all cyclicals. Most of them are also value stocks in the last week. That rally that happened a few weeks ago, it's kind of faded right now. So that's something to keep an eye on. Of course, we keep rotating into the more defensive groups like consumer staples and utilities. This is the story all year, and this is why the market is not far from new highs. But retail in particular, I just want to point out, I mean, this week, some of these stocks are just getting slammed. They're stable today, but ever since the tariff wars in May, these stocks have been getting slammed. They rallied briefly 2 or 3 weeks ago, and this week they're back down again. So that rally in this group has been very, very short-lived. Elsewhere, this is a quadruple witching day. It happens 4 times a year. This is the quarterly rebalance, the expiration of stocks and index options and futures. That's a mouthful. But the S&P 500 here is not far from new highs. I just want to point out we're getting a rebalancing today. This is the S&P quarterly, and we talk about all these buybacks. Yesterday, big buyback from Microsoft, big buyback from Target. Usually this results in a reduction in the share counts, including a reduction in the share count and their weight in the S&P 500. And today's when they do those rebalancing. So these companies here are going to see share count reductions. Why? Because they're very actively buying back their stock. Apple in particular is one of the classic buyback monsters. So their weighting in the S&P 500 is going to go down a little bit today. That happens at the close. You get a lot of shares changing hands. And the game here, of course, is trade all you want, but don't change the stock price. That's the game going on at the close. Just want to note here, guys, S&P 500, 3027, that's the old intraday high for the S&P, 3025, the old closing high. And again, Carl, knocking right on the door of that.